Hi, guys. It's Angelo Christian here today, coming back to another great edition of Real Estate Insider. And today we're actually be talking about this FHA zero down program. A lot of people are asking a lot of questions about it. How does it work? How does an FHA zero down home loan work? That's what we're going to be talking about today, to break down the nuts and bolts of it so you can clearly understand how this loan program works. And we've helped several people to get into a home with this opportunity, but I want to talk about the pros and cons of it so you guys know exactly how an FHA zero down home, because there's a lot of confusion. I've had a lot of people reach out to me and say, hey, Angelo, I don't understand this FHA zero down Chenoa program. So we're going to be talking about that today, and you'll see on the board some of the benefits, some of the requirements, and some other solutions that I actually recommend that could be a better opportunity. So the first thing is, when you're going to look to buy a house, typically when you're doing an FHA loan, you have to put 3.5% down. That is the down payment when you're trying to buy a house. It's 3.5% down, but then you have closing costs on top of that. Closing costs can be anywhere from 4 to 6% in addition to the down payment. So let's just use, for example, a $200,000 home. So on $200,000, you would normally put, with a regular loan program with the FHA, $7,000 down. But then you have closing costs on top of that. And the closing costs are typically 4 to 6%. So on $200,000, that can be anywhere from $8,000 to $16,000 for closing costs. That normally, like if you were to go to a bank or a credit union or like Quicken Loans, that you'd have to pay all of that out of pocket. So if you're going to buy a $200,000 home, your total move-in would be about 20 grand. That's a normal type of situation on an FHA loan. So the big thing here with the FHA zero down, the Chenoa program, is it covers your down payment. And there's a few different Chenoa options that we're going to be talking about today. But you still have the closing costs, and the closing costs can either be paid by the seller, or they can be put into the loan if the house appraises out and has the equity, or you can pay them out of pocket as a buyer. So, a lot of people, I just talked to several people today on the phone where they can pay the payment, they can pay the rent, they can pay the house payment, but they don't have the money to come up with the cash to close. So they're stuck. They're stuck like Chuck, and we got to try to figure out how to get them into a house. So that's why the Chenoa funds here is to help families to get into a home. And I'm going to talk about, some of the things I like about it, some of the things I don't like about it. And ultimately, in the end, it's your choice to see how we want to go, because we're going to come with many different solutions. And so basically, couple things on the Chenoa program, some of the benefits of it that I want to talk about. There is no income cap for the program. So like the state programs, the grants, the bonds, the down payment assistance, there's an income cap per your county, right? So like we're here in Texas, we have the Bond 79. In Florida, they have Hardest Hit, Seth, T-Shack. These are all Texas and state government-funded down payment assistance programs. They have an income cap on them. Typically, you have to make below $90,000 a year household income to qualify for the state program. So with the Chenoa program, the FHA zero down, there's no income cap. All right. So you can make, like I've helped several people that make 6 figures buy a home with zero down. All right. And they got all their closing costs paid by the seller or wrapped into the loan, so they didn't have to bring those funds to closing. Okay. So that's a huge advantage right there, that, hey, no matter how much money you make, that you can still buy a house and get the down payment assistance. The second thing is that you don't have to be a first-time buyer like the state programs. So there is no first-time buyer requirement. You can do it with, you currently own a home, you just sold a home, you had an FHA loan before, that's fine. That's not going to stop you from getting the FHA zero down with the Chenoa program. So that's a really, really cool thing, because a lot of people, they're opted out because they're not a first-time buyer, and then they can't get the down payment assistance. So the other thing is that it is a fixed rate mortgage. It is not an adjustable rate. Okay. It is a fixed rate mortgage. There's no prepayment penalty. There's no balloon. All right. The loan is assumable, subject to FHA. This is an FHA loan. This is not eligible for conventional or USDA or VA. Only the FHA loan can qualify for the Chenoa program with a 3.5% down payment assistance. So, and it's for single family homes and modular homes only. All right, single family and modular. This is not eligible for manufactured or mobile homes. You can do it on a townhome or a condo. If it's an FHA approved condo or a duplex, that's fine. So, but that's the main thing on those type of properties that you have to know. You can't do the FHA zero down on a manufactured home. You know, some of you guys call me and you want to buy a manufactured house. We can help you with that, no problem, but you just have to put 3.5% down if you want to buy manufactured. So, the other thing that's really cool, you can use the first-time buyer tax credit in conjunction with Chenoa, which is the MCC, the Mortgage Credit Certificate, that's available, and it's available like in most states. Okay, so and that's another really powerful thing. I did a whole segment. If you guys are wondering what's the first-time buyer tax credit, I did a whole segment earlier on that. I want you guys to watch that video because I explain how the first-time buyer tax credit works. So, and going back to the closing costs can be paid by the seller, or they can be put into the loan, or they can be paid out of pocket by you. All right. There's no income caps for the program. There is a loan limit per the county. So, and what you see as I'm talking here on the screen, you'll see all the pop-ups. So that way you guys can take notes and you'll be able to record all this later. So that way you don't forget, because this is a lot of information. I know it's heavy, but I'm trying to get you all the content I can. So that way you can see which is going to be the best home loan for you. But, you know, we'll make sure that you can also download, we'll make sure you can download the information too. So, but the other thing about the loan limit, it's based on your county. For example, in Texas, you can go up to a $330,000 loan, right? There's parts of but in the Northeast, you can go up to a higher loan limit because it's based on the income and the MSA and the housing prices. In California, you can go up to, I closed somebody that was in San Bernardino on an $800,000 home with zero down. Okay. And there's people out there, yes, that don't have on an $800,000 deal, on an $800,000 home, a regular FHA loan, that's $25,000 for the down payment you'd have to put down, plus another $40,000 for closing costs. So, and the family that I helped close, they were making good money, but they didn't have $65,000 cash to close, right? And their son just had a heart surgery, and they had to pay out of pocket for that. So we helped them to get into their house with zero down. And we had all the closing costs rolled in and paid by the seller. And it's for that purpose, it's phenomenal. It's a great opportunity. And I agree, it really does help a lot of people. But there are some, the other side, and that's the requirements and some of the disadvantages that I really, I'm not a big proponent of. And we're going to talk about that next. So the first thing is it does require that you have a 620 or higher credit score. So you have to have at least a 620 or higher credit. All right. So 640 is better, but they like to have at least a 620 or higher. And that has to be your middle credit score, not just one credit score. So usually most people have 3 credit scores. There's a Experian, Equifax, and TransUnion, and they take the middle credit score has to be 620 or higher. So the other thing is that no Chapter 7 bankruptcy in the last 2 years. So you have to be completely discharged from a Chapter 7 bankruptcy, at least 2 years out. All right. Chapter 13, if you're in a Chapter 13 bankruptcy, like we talked about yesterday, that's okay as long as you're 1 year into the Chapter 13 bankruptcy and you have approval from your trustee to be able to purchase the home. No foreclosures on your credit in the last 3 years. So you have to be completely discharged from any foreclosures in the last 3 years to be able to apply. And now there's 2 different Chenoa programs we're going to talk about. But the one other thing that I want to hit on real quick is, so we talked about this being a fixed mortgage rate. It is a fixed mortgage rate, but it's a higher mortgage rate. Okay. So basically on a regular FHA loan, let's just say, for example, the market rate today is 4.5%. On a Chenoa program, the interest rate's at 5.5%. Okay, so it's about 1% higher. All right. So if you ask me my opinion, My opinion is that that you should put a down payment of 3.5%. All right, because you're going to have a cheaper house note, right? And we can help you with lender credits to pay for closing costs and get those covered. All right, so that's the one thing that is, I think it's a great program, and it has a purpose in society. But I'm the type of person, I think you need to put money down. All right, that way you have a more affordable house payment, you have equity in the property, and you're getting better terms. I mean, it's a no brainer, And I know some people, they don't have the money. So the other thing that you could do is, if you don't have the funds, is save the money. I still believe that even if you don't have the money, that you deserve to own a home. But if you can get the money, get the money. Whether you got to sell something, you got to do a tax refund, get a gift from your dad, whatever, you're going to get a better loan. Okay. And that's something that I do want to talk about, because I am passionate about that. And I think that you need to have some skin in the game, per se, and build some equity in your property and get a cheaper mortgage payment. And if you can't do it, we can, refi. What I tell people is, most people that do the FHA Zero Down, the Chenoa program, hey, listen, it's a bridge to get you into the house, and we can refinance you later and, get you into a better program, put you into a conventional program or something that get rid of the mortgage insurance. Okay. And that's one thing too, that these loan programs do have mortgage insurance, and that gets included in your house payment, with your property taxes and your insurance. It's not a scary thing. It's not a bad thing. Conventional loans have mortgage insurance too. So don't be scared of it. Just understand what it is. Now, when you make your house payment, the property taxes and the insurance are also included in your note. So you are escrowed in. All right. So whenever you're actually making the payment and you write the check, the taxes and the insurance are also included as well. So you make one monthly payment. We also do biweekly plans too. If you want to do a biweekly plan, that's also a really good idea. That will help you to pay the mortgage off faster. And I am a advocate of that, paying the loan off faster. Because if you do a biweekly, then it can go from a 30-year down to a 23-year, and then you can drop that interest rate even further. Your effective interest rate will go down by doing a biweekly plan. I'm going to go into now, and you'll see this on the screen here. There are there's actually 3 different type of Chenoa products. There's really 2 of them are very similar. So we're going to hit on those now, so you guys can understand a little bit more about how this FHA Zero Down works, and see if it's the best program for you. Like I said, we've helped several families get into homes with it. So the first type of the FHA Zero Down Chenoa is called the forgivable. All right. So basically what this is, that again, when you're going to purchase your home, you're getting the down payment assistance from the Chenoa Fund, this DPA program, and it's at a 0% interest. There's no interest charge for the down payment. It's combined with your house payment, and you can either do a 10-year amortization or a 30-year amortization on that second loan. Okay. So I know that you guys are probably thinking, man, what's this guy talking about, man? So we're gonna break it. I have the math. You'll see all the math broken down. Well, I'll show you, and you'll see exactly how it works. So the second mortgage, when I say amortization, that's the duration or the term of the loan. So it's either a 10-year based on a 10-year horizon or a 30-year horizon, but there's no interest charge, right? So the payment is very small. Basically, it's $20 a month, $30. So based on the size of your house, your mortgage. So, but when you write your check every single month, that's all included with the house payment, right? Now, the forgivable means that, guess what? After 3 years, that second mortgage is forgiven. So, hey, after 3 years, you're done. You don't have to pay it anymore. So now the $7,000 loan that you borrowed is gone, right? And that lien is removed from your title to your property, and you no longer have to pay it. Now, there is a requirement for that, and your income has to be below. This is where there is an income cap for this Chenoa program. Your income has to be below the MSA county for your area. So if for example in Houston, in Texas, in Harris County, your income would have to be below $80,000. And this is when I say income, it's total household income. It's not just one person. I get all the question like that all the time. Well, can my wife just go on the loan and not me? Well, no, because they're going to take total household income. So the total household income has to be below 80,000, for example. Now, obviously, there's areas all over the country where that income cap is higher. Could be 100,000, 150, 200. It just depends on the area. Most of these programs are people below that make below six figures. Okay. But that second lien is forgiven after the 3-year mark. Now, if you try to sell the house or refinance prior, you have to pay that. You have to pay that down payment assistance off. So keep that in mind. Let's say that you want to refinance or you want to sell the home. That second lien, that down payment assistance, has to get paid off. Okay, it's not, because it's still there. It's still in place. So that would actually have to get paid off. So just keep that in mind, because that doesn't go away. Now, the other Chenoa program, the other FHA zero down, right, is where you have there's no income cap, right? And you get the down payment assistance of $7,000, and it's not forgiven. So you have to repay it. Okay, and it's financed into your loan. So you have two loans now. You have your first loan, and then you have your second loan. But instead of it being forgiven, you will pay it off. You'll have to pay it off. So, and this is for people that are high income earners, people that make, a good income, because there's no income cap, but you have to repay it. So, for example, you can either do a 10-year amortization or you can do a 30-year amortization. And every month when you write your check, you'll have one pay. You'll be all included in your monthly note, and you have one check going towards, or one amount going towards the first mortgage with your taxes and insurance, and then the other one will be going to pay off that second. It's still now it's at 0% interest if you do the 10-year amortization. Okay, so there's no interest charge. It is interest free. If you do the 30-year amortization, meaning that the 30-year term, then there's a 5% interest charge. Okay, it's a 5% interest charge, and that's paid monthly in your monthly payment. So the other thing that I do want to say about the FHA zero down is that the interest rate is higher, but also there are fees associated with it. All right. So when you're doing this program, there's a participation fee to participate in the program, and that's typically about 1% of the loan amount. Now that can get financed in to the loan, or that can get paid by the seller, or be paid by you as the buyer. But that's another thing that you have to keep in mind, that it's not, the interest is free on the loan if you do the forgivable or the 10-year, but there is that fee that has to be paid, and that can be financed into the loan, or like I said, paid by the seller. So, but in a nutshell, that's basically what the Chenoa loan is, the FHA zero down, and how it works, understanding how it works, Now, again, if you absolutely can't do it, I understand, and we'll still help you to get you into your home. But at the end of the day, I still really believe that getting the funds together with the FHA, the government, there's many acceptable ways you can come up with the money. Again, you can sell something, get a gift from family or even your employer, or obviously savings. And then if you have a tax refund coming, there's a lot of different things that you can do that the FHA allows. So the other thing also about the Chenoa, the FHA zero down, is it does allow for co-signers, which is very interesting, because the state DPA programs don't allow for that. Okay, so let's say that, and it has to be a family member that's related to you. So let's say that, like, for example, one of the families I talked to earlier today, it was the husband and the wife, okay, that are buying the home, but they want to put their son on the loan too. But the son doesn't actually live in the house, okay? But they want to add his income and his credit to the loan. So the way that works is FHA allows for non-occupant co-signers. So that means that the son that doesn't live in the home, he can put his income and credit on the loan to boost the purchase price or the qualification, but he doesn't have to live in the home. I'm not a big fan of that, but if people want to do that and the government allows it, because you could now, even conventional, you could do that too. You could use a cosigner to help to boost your qualification. But what we're seeing is that because the price of housing has risen so high and the incomes haven't, that sometimes you need a cosigner. Like I have you see people in some parts of Florida, California, Maryland, Massachusetts, where someone's making $60,000 a year. How can they buy a $500,000 home? So hey, we'll just add a cosigner. That to me is not really the best thing to do. That you don't. That's still too risky. Because you're on the hook, and so is that cosigner for the mortgage. Right. So I would say that, and you're going to say, well, Angela, I can't find a house. No problem. We also do construction loans. We can build you a house. We also lend on manufactured homes. If you need a manufacturer or modular, those are more cheaper. They're more affordable, but you don't want to get into something that you can't afford. Right. But at the same time, you want something that's nice. That way you have you want to have a nice home. So I always say, try to boost your income. At the end of the day, you don't want to be wasting your money on rent, because rents are rising at a ridiculous rate too. And if you look at it over time, like we did a whole segment on rent versus own, and it definitely makes more sense to own a house versus renting. Rents are rising too. It's not just house prices, rents too. You want to own a house, but you just want to make sure you're smart about the loan program that you choose. And at the end of the day, this is how the FHA Zero Down Chenoa program works. I hope that it was helpful, that you guys understood it and it makes sense. If you have more questions, call me. You can always call me directly at 832-431-6331. You can message us down below, either on Instagram, Facebook. We're real good on Facebook if you want to hit us there, or on YouTube, which is really good. And if you're looking to get pre-approved to buy a home, or anyone that needs help, please send them my name and my number. I'm here to help, whether you're a realtor, a builder, a customer. And again, I'm open 7 days. You can call me anytime. With me, I'm here directly, work with me and my team directly. So if you need help and want to get pre-approved and you're looking to own a home, reach out to me. I'd love to help you with your situation to get into a new home. I definitely believe that you and your family deserve to own a house. And if you have any comments, comment down below if you want to learn more about the FHA Zero Down, and we can look at your situation and see what's the best way to go. And then also message us if you want to see anything else. Please follow us, guys. We do 3 shows every single week. We have Learning Hub, Influencers, and Real Estate Insider, and we produce all this content. It's free. You don't pay anything for it. We're here to deliver this so we can educate you and empower you to make sure you understand what the best loan programs are for you, so you and your family can get what you deserve and you can get into your home. So I'm Angelo Christian. Thank you so much for checking us out today. We'll be back again tomorrow with another great edition wrapping up this week. Take care and peace out, guys.